You're listening to Alternative Investor Mastermind, where we do a deep dive on alternative investment opportunities and the lifestyle it can create. Join Jack Krupey as he presents actionable tips and tricks in doing passive real estate away from mainstream strategies. Go beyond the usual fix and flips and try less explored yet rewarding investing ventures, from multifamily properties, mobile homes to cryptocurrencies. Do not miss this opportunity to escape traditional assets and finally create wealth without Wall Street. Now your host, Jack.
No discussions in the podcast are meant as an offer to sell or a solicitation for an offer to buy any security. All investments should be done after careful review and consideration of the investment documents and disclosures. Contents discussed in the podcast are not meant to be construed as an investment, tax, or legal advice. Individuals should always consult his or her own professional advisors before any investment decision.
Hey, everybody. So today's episode, we are going to talk about natural disasters. I spent some time in Medellin a few weeks ago with Zack and also Riz, who does some content for us. So we were at a co-working space and really just hit the record button. We talked about a lot of different stuff. And this was an episode that somewhat came up organically. We had shot a Halloween episode, which hopefully hopefully you all enjoyed during Halloween. And this really just came up as part of our conversation, sharing some of our experiences on the risk factors of various natural disasters and how the diversification of our portfolio helps us mitigate that. So hope you all enjoy. These cities that are a little newer are going to have to deal with it as people are moving away from the Northeast.
Yeah, no, it'll be really interesting to see. And again, we've seen it recently with hurricanes, other extreme weather events, in my home state of California, wildfires, where you are seeing in a lot of areas. New Orleans is a prime example of almost climate migrants to an extent, people who are being forced to move from one area to another, largely because the geography isn't habitable anymore. New Orleans, how many people moved from New Orleans to Houston and led to a massive population growth that is now largely unsustainable, but also Houston is looking to expand highways and buying up properties along large stretches of highway to add an additional lane, 2 lanes. Here in Columbia, we're seeing that as well, where again, the population has boomed for one reason or another. And the question is, how can infrastructure building keep up with that kind of growth? Right now, after the recent hurricane that hit North Carolina, especially hard, what is the timeline for building out that infrastructure again that can be done fast enough so people don't have to leave?
All right, so probably a good time to talk a little bit about natural disasters in more detail. We have a pretty extensive portfolio of over 50 investments. All right, so talking about hurricanes, we're recording this in between 2 hurricanes, one that just hit Asheville, North Carolina very hard. And there's another one that's approaching Tampa, Florida as we speak. So we'll probably put this out within a week or two, but it's a great, probably a good opportunity to talk about natural disasters and how it affects our investment decisions.
Sure. Yeah, no, I mean, it's something that is very, very relevant, something that we all have to plan for, prepare for. And that's one of the reasons that, we've been investing in properties at scale with large operators, because if you're going through something like the people of Asheville right now, and you have to figure out how to fix your, one roof, get your, contractor out whose phone is ringing off the hook, everything changes in the wake of disaster, whether you're expecting one or not.
Yeah, it's scary times. We're not invested in this deal, but there's an operator I've previously invested with personally, and they're building a new construction apartment building in Asheville now. So I know he flew as close as he can get, picked up a bunch of supplies, and drove, I think, like a U-Haul truck full of bottles of water, canned food to support the workers and employees in the area. I believe they have a complex that's already existing, but they're also in the process of new construction. So they were at the concrete pouring phase at that point. So they had workers that were in from out of state to pour concrete that, stayed and rode out the storm and just try to make sure that the site was still viable. And then the storm damage caused, issues that would have to make them really start over. So it's a scary time. And what's scary about these hurricanes in some cases is, the insurance, which has been a big issue recently. Depending on what happens, sometimes it's not a hurricane by the time it hits a region, but it's just, a lot of a rainstorm. So there's all these loopholes in insurance as well that I know in the past, people have not had flood insurance in an area that wasn't known for flooding. And perhaps it wasn't a hurricane. So the insurance company pays less or tries not to pay because they say, well, it was a flood. It wasn't insurance. Wasn't wind damage.
Yeah. These kind of things happen all the time. And, on that side, the insurance companies are often overwhelmed with all the claims coming in, with, again, the size and scale that disaster can hit with is often right now unprecedented, with storms getting bigger.
Yeah, insurance has been a major issue the last couple of years. There's been I feel like growing up, there was a point in the 90s where it felt like every year there was a major hurricane in Florida. And I think we went through a period of 10 years or so with just less storms or just less catastrophic storms than previously. But yeah, over the last few years, there's been just a lot happening at once. And it wasn't all just a typical hurricane. You had the deep freeze in Texas. And I guess a number of insurance carriers have just taken a lot of losses, and it's caused premiums to, in many cases, more than double. And it's really something that when you factor in an investment decision, it's something you really need to take into account. That insurance may not be $300 to $400 a door anymore; it could go to $1,200 a door annually per. And that's a major change to the net operating income if you're not factoring in the potential increase in insurance.
Right. Well, and that's also a question: is as a real estate investor, how much of that are you really even able to pass on to the tenant? We've talked about this when it comes to debt service. Of course, if your interest rate triples, of course you're paying $300 a door up to $1,000, and then if you factor in insurance costs going up, at a certain point in certain markets, it doesn't become sustainable to invest in real estate. If you can't get insured, for example, in parts of California where you can't get insurance because of wildfire risk, parts of Florida where you do have some insurance companies pulling out of the market because of again continued hurricanes, and again pressure on the insurance companies to go through and again make these payouts like we talked about. But what happens when it happens more often in areas that are uncharted?
Yeah, it's you talk about the insurance carriers pulling out. California approved, I think, a 30% statewide potential increase in insurance, or one of the larger carriers was gonna pull out.
Yeah, I believe it's State Farm, if I'm not
Yeah,
mistaken.
and then once that's approved, then the other carriers, even if they weren't gonna increase, are gonna take advantage of that just because it shows them where the market is at, and the State Farm is gonna raise their rates, and everyone else is gonna move along. And at least on residential, there's some other justification because residential prices have went up a lot. So when prices are up, the replacement cost is going to go up, and just cost of materials, supply chains. I mean, there's legitimate higher costs. But on the residential side, it doesn't necessarily decrease the value of your property. On the commercial side, it's a direct impact to the profit and loss, to the net operating income. So the increase in insurance cost is going to pull down the prices. So if the question is, can it be passed on to the tenants? It really can't. It's really passed on to the ownership, and it's going to affect what the actual price of the apartment building is going to be over time.
Yeah, no, that's right. And one thing that we always talk about when we're in diligence on a property is what kind of natural disasters do we have to factor in? What do we have to underwrite for? Because again, insurance costs could be different, but also, when it comes to the size and speed of damage that can be done, what does that look like in terms of then coming back and rebuilding? If you're looking at Asheville as a prime example, there's a lot of infrastructure across North Carolina that's been wiped out in a lot of ways. And the question is, how long does it take to come in, rebuild that infrastructure? Of course, it leads to a lot of jobs in the area, people coming in, moving so that they can rebuild. But the question is, over what timeline? And as a real estate investor, can you, no pun intended, of course, can you weather the storm?
Yeah, and it's something that we certainly factored in. It's really hard to know exactly because it's also very much jurisdiction by jurisdiction. It depends on how bad the damage is. You need to go back through the permitting process. We're invested in a deal in Lawrenceville, Georgia, where there was just a small fire in one of the buildings, just a tenant cooking fire, but it took out 6 of the units, and I think it's been a year battling with the city just to get final permits approved to rebuild those units, and the insurance is covering it, and there is an insurance for rent loss, but I don't know what those maximums are. And at some point, if the city or the county is dragging out so long from the permitting process, there may be a point where you hit your cap on the amount of lost rent that's insured, because the insurance companies don't, they're not going to pay you for 10 years of lost rent because the city is not, cooperating properly on just issuing timely building permits. So yeah, there's the permitting side. There's how long is the electricity out. Fortunately, I don't expect power to be out as long as, say in Puerto Rico when they had the hurricane where some people had, no power for 3 months, but, it could be,
and infrastructure that still hasn't been built back out in Puerto Rico.
Yeah. And Puerto Rico is obviously its own, it's an island. It's got its own infrastructure issues, but yeah, I mean, areas, I think back to like an ice storm that happened in upstate New York when I, was up there for university, and, the downtown area generally had underground power lines, but, a lot of the suburbs had, above ground power lines, and when the ice, whereas this happened in New Jersey as well. And there's, suburban New Jersey, people without power for a month. Suburban Rochester, New York, same thing. People were without for months just because the perfect storm of freezing rain, it turned into ice, and the ice just literally, the weight of the ice took down power lines and power poles all over the city.
Right. No, and that's one of those things where, we always look to invest in scale. And one of the reasons for that is because if these really somewhat unforeseen circumstances are to arise as a result of a natural disaster or anything in general, really. There, again, something like, like COVID comes up that you're really not prepared for. You're more prepared if you can operate at scale. And if you're just a single, mom and pop and you have a rental property here, there, even worse if it's out of state for you, how are you able to go through and recover and rebuild in any sort of rapid timeline?
Yeah, agreed. I think, scale, and then the other big thing is diversification. Yeah, I think there's very few parts of the U.S. that are immune. I don't know that there's an area I could think of off the top of my head that's immune to a natural disaster. Nobody would have thought that, Texas had that deep freeze a few years ago and pipes froze in many places. And if you're only in one deal and all of a sudden something happens, I mean, you may go months without cash flow or worse, something happens that's more catastrophic and, insurance is not sufficient. Generally at these scales, though, I will say there's a lot of eyes on these deals, and having sufficient insurance coverage is very much a lender requirement. So, being under it's a lot more difficult to be underinsured on a large deal because whether it's Fannie Mae providing a $30 million loan or one of the large commercial lenders, I mean, there's just a lot of requirements for ensuring proper insurance, and there's frankly consulting firms and some of the insurance brokerages that run a whole business on shopping for the best insurance policy that has all the proper coverages.
Sure. Yeah, no, and I mean, one thing that, I always look at, when, sorry about that, when we're on this subject is, where are we investing? Why? Again, what kind of insurance is available? But also, again, if something were to happen, do we have enough boots on the ground to be able to go out and bridge the gap between when the insurance claim is made and when, any kind of funds are actually deployed? But also, do we have the right workforce in place and the ability to get, I had a really good friend of mine who owns a number of properties. He's, just doing it himself in Southern California, commercial properties, a bit of residential. And there was a large storm that hit Southern California, unprecedented rains in Southern California. And of course, it's an area that's not known for that. And so the building that's been done over the last several decades is not built for any kind of heavy rain. And he had damage to roofs, 5 out of 7 roofs on rental properties of his. And he's just going from property to property himself, stepping up on the roof, seeing how bad it was, and seeing what kind of timeline, his once in a while contractor could do. And it's pretty hard to compete as, a solo operator doing your own rental properties when then you have much larger players going out who have their own 24-hour maintenance and contractors.
Yeah, absolutely. Yeah, when you've got a 200-unit complex that has 30 roofs, you're going to get the attention of a contractor. That's across the board, whether it's roofs for these natural disasters or even just getting someone to show up to do renovations. Also, and there's also different suppliers. I know if we're renovating 100 units in a building, there are specialty contractors, specialty distributors that you can buy all the supplies in bulk. They'll come out, they'll measure pretty much every style of unit you have for the exact size of the kitchens, the exact size of the countertops, and you pre-order everything. It's sitting at the warehouse on demand. If you're going to renovate 3 units a month, you have the labor and the materials all ready to go on demand.
Yeah, no, and that's that really has to be the only way to do it. But also, if you're an operator at scale versus, again, a mom and pop, what kind of capex are you looking at? What kind of really, what kind of budget do you have in place based on cash reserves to be able to go through and make that fix? That's something that every sophisticated operator goes through and plans for, is setting aside these kinds of emergency reserves, emergency funds. Something that, again, if you just have 1 or 2, rental properties, small commercial properties, that it's a lot harder to be able to budget for that and actually get the benefits of investing in real estate, which is the cash flow, followed, of course, by the appreciation that we're all looking for.
Yeah, it's certainly a challenge. It's we talk a lot about the lack of scalability, and I guess this is really part of the lack of scalability of just not having the attention of the contractors, not having as maybe a sophisticated insurance broker that or claims adjuster that could really help you navigate the process. And it's an ongoing challenge. It's the reason I don't own any onesie twosie single family properties anymore. It's just
I'm sure you have some horror stories that we'll go through a little bit later.
Yeah, absolutely. It's it was great to experience it in my 20s when I did, and I'm thankful to have found better ways to invest over the years.
And you haven't lifted a hammer since.
Yeah, for the good of my properties and my health, and it's yeah.
No, yeah, and again, just the whole point we were talking about today was natural disasters, and when they come, you have to be as prepared as possible to be able to move quickly before everything changes, and you don't really have a way out.
Yeah, exactly. And as I said, we are filming this, while the Hurricane Helene is
Milton is coming.
Helene was the one. So certainly our thoughts and prayers go out to everyone affected, and we'll post an update, I'm sure, because we do have some properties that may be, depending on the path of the hurricane, that may be affected by the second one. As of now, we've had thankfully no major issues on our deals. I got updates from our properties in Florida, in South Carolina. We have investment in Marina in Tennessee that had minor damage, but nothing that would likely even require an insurance claim. The in-house maintenance was making the minor repairs, and a few of the repairs were things that were slated for actual replacement or capital improvements anyway. So, thankfully we're in good shape on our portfolio. And then obviously having diversification, everything in Texas, we don't have to worry right now, but wintertime, if there's another storm, if our Texas deals are potentially affected at that point, the Florida deals should be fine. So, certainly hate to harp on it, but diversification is very important. And, certainly just want to remind anyone who's thinking of investing in this industry that, diversification is key. So, with that, we're going to wrap this episode up. Thank you so much for listening. Thanks again for listening. Please remember to like and subscribe on YouTube, the JCAM Investments channel. Also, like and subscribe to the Alternative Investor Mastermind on your podcast platform of choice, iTunes, Spotify, and many others. And connect with us on all major social media, both my personal profile as well as JCAM Investments on LinkedIn, Facebook, Instagram, and even TikTok. Thanks again. We'll see you in the next episode.
That's all for this episode of Alternative Investor Mastermind. Now that you know the many alternative opportunities out there all up for the taking, you can finally become ultra connected and ultra wealthy. Get more valuable advice from the experts by subscribing to the show at AlternativeInvestorMastermind.com. Become a winner in the world of passive investing today in alternative investment strategies. Thank you for joining us. Until